It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock till noon Eastern Time at that number, 877-927-6648. You heard it. And, of course, you had 2 great hours. Steve Rhodes kicks us off here at TFNN, 9 o'clock Eastern Time. Goes for an hour. Normally it follows it up with a show that on Friday, Tom O'Brien takes over, which would be right now. Tom's not here, so he assisted. He was with Daryl Martin, and Daryl has a show, and I believe that's at 1 o'clock Monday through Friday, and he uses the Nadex platform. We have programming right through the day here, going 9 o'clock until 6 o'clock, and then on Wednesday, you have an extra hour where Tom O'Brien does a show. Now, let's talk about this market. The Dow's down 30 at 16,884. The S&P is down 2 at 1962. The comp index is up 8. Very interesting. At 4404, there is some strength in, what was I looking at just a moment ago? In Facebook, but you've got some of the others kind of lagging here. You've got also bonds. Well, let me just go to the gold first. The GLD is unchanged at 128.53 with gold down just 2 points at 13.37. Most importantly, what I'm looking at right now, well, let me also tell you that silver's down 2 cents at 21.48. The action in bonds up 13.30 seconds. This is going to be really important over the coming week. I say that this week will be very influential in that it's going to give us parameters that we can look for the rest of July. Those parameters will be fulfilled in this coming week if certain factors come into focus. And we're going to go through all those. I'll talk about the VIX. We'll talk about some of the other technical indicators, some of the sentiment indicators, etc. However, when I'm looking at this, I'm also looking at the IWM, which is the Russell 2000, struggling since it made 120.97 its peak EO. I haven't spoken about that. My methodology, for those of you new to my work or maybe new to the program, I make it a very simple concept that you identify the lowest, most obvious low bar, and from that, you merely count each successively higher peak, and at some point, what you're looking for is you want to see whether or not, and this is always very important as far as I'm concerned, whether or not the first of all, the low that you identify isn't going to make 4 successively higher peaks. That's how simple it is. Peak D, as you can see in the chart that I'm showing here, the weekly chart of the IWM Russell iShares ETF, stopped at 128.58, pulls back, makes a cup formation. I got all those formations. I forgot to put my CD up, and I'll show it to you, available at TFNN. It's called Introducing the Chapman Wave Methodology. And that made a full retracement, 100% retracement from 120.58 down to 107.44. Let me just type that in so it's there. 107.44. That was the week of May the 16th, and it has a single leg up, which means that on the way up, it would have been called what I call a gray A because it was underneath that last D, and it's the first leg up from the low bar. But the moment it crosses 120.58, if it hasn't taken out the initial buy signal, which started in this case at 107.14, that says you now have 2 concurrent waves. Make it as easy as possible. And what do? We go in the IWM to 120.97, just a mere 40 cents higher, 39 cents higher. And that counts as E/E. But that's where you've got to do a vertical study. You have to do it. You've done it horizontally. Now you want to do it vertically. And what you're looking at is the candle that made the high back at peak D, that 4th highest peak on the week of the 7th of July of March, had the MACD pulling back and the stochastic pulling back from the most recent highs. And now it's even lower. So the technical veracity, the strength, is not anywhere close to as strong as it was before. Now let's do something else. So we're saying be a little careful here, especially when you see this bar, the bar of this entire week closing. If it closes under 115.91, it's at 115 right now, down 26 cents. If it closes underneath the 9-period moving average and the stochastic is headed down and the MACD is not really confirming the strength, then we're going to have to say, be careful. We could be hitting a sell signal. The monthly chart in the Russell is in leg because it's recycled. It's gone to a leg F/C. And it's starting to show characteristics of F. One of the reasons why, in my opening course, my daily service for my subscribers, one of the reasons why we are starting to add shorts to the positions, we do have longs, but we're adding shorts, is because in this position, where the weekly charts are so close to starting to show weakness in their technicals, that's the MACD and slow stochastic. I'll get into that. You get used to the technical terms and technical considerations that I have here. That says just be careful because we could be making some kind of a rotational top, but there's something else that's going on. If you look at my Dow Quartet index, I call it a Dow Quartet index. It's not really anything other than GE, IBM, MMM, and UTX. They're not doing very well at all. And this market might go on a little longer by itself, higher, but if that Dow 30, which are really important stocks, even though people dismiss them and always wave their arms and say, it's just 30 stocks, it absolutely is just 30 stocks. But these are 30 stocks that have cyclicals, financials, defensive stocks. It's a complete smorgasbord of what's out there. And these are the heavies of the Disney. It's the heavies of the heavy. So I don't dismiss ever the Dow. I've made a daily call on the Dow for over 20 years now, every single day. Do not dismiss the Dow. So here we go. Finishing up, I just wanted to show you the dollar DXY. That's the dollar index. Having a nice day today. But why is that? Let me just move this space to the right. 7, that's good. Okay. So let me squash this a little bit and show you. So if you're new to my work, the left side usually is my daily chart. The weekly chart's in the middle. Monthly chart is on the right. Look at the monthly chart. Made a huge, I'm going to squash this a little bit, going all the way back to 1995 or even earlier. Look, 1995, you made a low of 1993, 78.33, bounces, pulls back, hits 83.81, and then starts a brand new 2 buy modes going to peak E and then a peak E again to 121, round number high, July of 2001. That is 13 years ago. And then what does it do? It pulls back to 70.70. It doesn't pull back. It cascades to lower low at 70.70. And then every rally in the dollar with as far as I'm concerned, with the Fed wanting a lower dollar so that we could have better import-export ratio, that's just my thinking. The whack-a-mole is always beaten down on the dollar every time it tries to rally. And even now it went to peak F, but all within a 72.70 to, was that an 89, was it? Somewhere around 84, 85 high. That's nothing, 13 points. Oh, it's a big percentage move, but it's nothing when you're looking at the historic relevance of the dollar. So to me, the dollar is still lagging desperately. And now I just wanted to do one other thing here is to show you EUR USD. This is the euro-dollar currency pair, also within just a trading range. And it's broken out above the trend line, but it keeps on retesting that trend line. So with that, I had a question in the den, which I think is appropriate right now to go to. And that question was, well, there were two. One was Apple. Would I look at Apple? And I think Apple is an important stock here because it's almost in the category of being like a Dow Jones defensive, where you've got a mix, where it's high tech, but at the same time it's now a dividend stock. So in this particular instance, what we're looking at is the monthly chart of Apple shows, don't worry about those little letters that are floating up as if the wind took them and they're blowing. That's when pre-split Apple. So it's a brand new buy mode round about, I think it was January of 2009 in the split era. It went to 1117. Starts a brand new buy mode, and that brand new buy mode goes peak A, B, C, D, pulls back, Remember, D is very important, the fourth highest peak, and then it goes A, B, C, D, but then it recycles and basically says, I want to keep going high because the MACD, that fast-moving average of the MACD, reignited, and it took it to an E and an F, and it made its all-time high at 100.72. You remember that was 705, I think it was, back in September of 2012. Plunges down to 55. That's a 47% decline, and now it's gone back to ABC, and it's in leg D in the monthly, trying to reach the all-time high of 100.72. It's at 95.57. Will it do that? Well, the MACD is good, the stochastic is good, and that says we have to go to shorter time frames to see if this leg D is going to have a pullback. Well, you're in leg E in the weekly chart. MACD is still expanding. Stochastic's at 87%. This still looks good. Apple's still looking very strong. If you hold Apple, just keep holding Apple. Now, here comes the tricky part. The rudder, the shorter term daily chart, has made a leg G/B and then a peak G/B in the last move. It's a Chapman wave cup and ladle breakout, which invariably can go to a D, unless there was a recycle right here. It's called the Chapman wave instant restart. Gosh, there are a lot of techniques that I've developed over the years, proprietary techniques, but I do share with my subscribers, and I do teach in my Master Trader series. So that could be A, B, pulls back, and this could be C/B. So there are a whole bunch of interpretations. I would prefer to say right now, the stochastic's at 81. The MACD is good, not great, but good. I would give it the benefit of the doubt. And the pattern that I like to look at, this is called a flag pattern. If it was expanding, it would be called a Chapman wave falling axe pattern. And all it says is if Apple, it doesn't have to close even. It just has to go to 96.49. $1 up from here, and it says there's a real good chance not only will it test 96.80, the recovery high, but it will start a brand new leg, and that leg I will have no hesitation in calling brand new leg C. If it fails and Apple takes out, trading right now at 95.56 up 52, if Apple AAPL pulls back and closes under 93.52, that'll say, uh-oh, going back and probably going to retest near the 91 to 89 area over a period of a few weeks. So I'm looking at it and saying positive action. Unless it breaks down, I'd even use the near-term 120-minute chart to say same kind of pattern, different parameters, a break above into the 96. A break into the 96s would be very positive and say, hey, you do that, and there's a real good chance that you will try to test the 96.80 level. And on the downside, if Apple breaks the candle at the 120-minute candle low of 94.40 made on the 10th, it's probably going to test the most recent low of 93.52. So I say quite well. But just on the short term, those are the parameters to watch. Up back, Basil Chapman, 877-977-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, we're back, and I have a quick question here about ADM at Arch Daniels Midland. And if you look at ADM, I did start a position in my IRA. I'm using this as a long-term food supply play. And I like the action very much. I looked at it just recently, and I meant to do a little bit more work on it, but I like it very much because it's about to break above the 48.95 high of April of 2008, and so far 47.68. It's within 70 cents or something of an all-time high. That's where you've got to be a little bit careful. I've got D in the daily, D in the weekly, and I'm not sure yet. I redone A, B, C, D, E, F, G. So that's recycled. I like it. I like it a lot. The longer term, you've got to be prepared for some kind of consolidation. I would do this. I would you've got to start a position. I probably wouldn't do anything just yet. Let's see if next week consolidates between 47 and 46.50. If that consolidates, if it does pull back and that's the level it hits and consolidates, then we'll be looking at the weekly chart and seeing whether it's capable of even moving higher. So yeah, nice entry point, and I'll try to get to it a little bit in more detail maybe on Monday, but that's what I've got for now. Let's go to Ben in Tallahassee. Ben, how are you?
Very good. How are you doing, Basil?
Well, thank you.
Great. If you look at the Dow daily.
Yes.
And you see, I think Steve Rhodes calls it the hammer candle, and I think it maybe is the Roman. Let's see.
This is yesterday's?
Oh, crap. I just lost it.
Oh, I think you're talking about the 26th of June?
Let me pull it up here. No, the July 10th.
July 10th?
Yesterday. I'm sorry.
Okay, yes.
Yeah. You look at that. You look at 6 months, last 6 months on a daily. Each time you see a candle like that, it just seems like it's always triggered. I mean, I have a hard time seeing any time it didn't trigger a buy mode.
Well, you know what? What's very interesting, when these things occur at the tops, let me just show you something. I'm going to switch, folks. I'm switching from this one chart to another chart. The same thing. This is the Dow. And I just wanted to show, because it's so clear here, there are a number of techniques that you could use right now if you're looking at the longer term. You've got a price channel. It is so clear, certainly the way I draw channels, it is just so clear that it says to me, make it simple. Every other time that the Dow has made this cup formation, if there have been 3 black candles, usually there's either 1, 2. When there are 3, and there were 3 back from the 16,735 high, little doji candle back on the 13th of May, pulls back, and within that for about 6 bars, and within that there are 3, in this case because I'm using black candles and white candles, 3 really ugly black candles, and all of a sudden it turns around right at that up channel support line, and that becomes the opportunity to make a cup formation, which it does, and it extends and it goes to 16,970 on the 9th of June, makes another cup formation with just 2 ugly candles going to the 16,703 low of June the 12th. Then it goes up to 16,978, nominal new high by 8 points on the 20th of June, pulls back with just 1 ugly candle, so you've gone 3 to 2 to 1, and then you get not the same as yesterday's candle, but very close. You remember that day that started off so badly on the 26th of June? And what does it do? It lands up closing right on the maroon line, which is the 9-period moving average. And then what it does, it makes another cup formation. This is what I've been showing subscribers in great detail for weeks now. And I even said, there's a match, but it will not match today, because this is an important day, unless 2 things happen. One is, there's a rally, and there's a rally that closes above this little. Now I'm going to have to expand this. Let me just expand this. There's a rally that closes above this little dashed line. It's a sub-channel to the downside. And if there is a rally that closes above it, and it's really tight parameters, it wouldn't take much, then all of a sudden you're looking at the 9-period moving average becoming support, and that would say, great. But the most important thing, the 2 parts of this, is that if there's a candle today or tomorrow, or Monday, that closes above 16,980.35 by 1 penny, that would say, you've got yet another cup formation. And on the downside, the technique, I didn't actually have space to type it in here. Most subscribers now are starting to recognize this very quickly. This is the Chapman Wave Roman candle, and I'm going to just put it in right here, of yesterday. If there is if at any point there's a trade right into this level of 875, you will go to the bottom. I'll be right back with Ben and Tallahassee, looking at the Dow, talking about patterns that repeat and what's making the difference today so far.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks, so we're back. So what we're doing here with Ben Tallahassee is we're comparing the highs of in the Dow. In particular, we're looking at things like where was the MACD, the moving average, convergence, divergence, and the slow stochastic on the high. It was made the 10th of, around about the 10th, 11th of, on the
July,
10th.
right?
Right, of June. And you'll see the MACD and stochastic were at highs.
Well, actually, I was looking at just this Roman candle yesterday, right?
I'm going to get there now. Let me just tell you something else. That on the 20th, when the Dow went to its high of 16,978, the MACD was then deflected lower, and it had huge volume, and the stochastic was way lower. Now you look and you see, hey, wait a minute, we've just gone to 17,074. And very often millennium levels, those 1,000-point levels, become either breakouts. Just remember when we finally broke out from 10,000, took ages, and then whoops, we went right through it. So sometimes you can get really stuck at a level, or you just slice right through it. When you slice right through it, you literally do that. It's like a Chapman wave cup and ladle. You just take it out. You don't even look back. You move from the 17,000s to the 17,180 to 17,230 level as kind of a support because it's so strong. So this is what's missing right now, and the stochastic and MACD are very weak. So we are short the Dow for my subscribers, and we're using a particular instrument, an ETF, and we've got a fairly tight stop, and so far everything's working out fine. But that's not the issue. The issue is what happens with the weekly chart. Now let me get to your Roman candle. So what will happen is that the weekly chart, if we close underneath, and I don't see any way we can break into the 17,074.66 level, 1 penny to a new all-time high to continue this leg E in the weekly. If there are what I call a two-bar reversal in the Chapman wave, if there is a high of this 17,074.65 and then a high of 17,063, just 9 points lower, and then next week is not a very good week because we close towards the 16,809 level where the 9-period moving average is. This is where this Roman candle is going to become more and more important. So now let's go back to the question that we had. What is the Chapman wave Roman candle? It is a candle where usually it occurs where there's a very nervous opening and the market opens, and then there's just like a fractional little wick higher. That means it opens, say, at 200, and it goes to 201.10, and then it smashes down to 170, and then closes at about 185, 187, somewhere in the middle. The candle body itself is like a halfway marker to the whole wick or a little bit higher. So the candle that we saw yesterday was very, very, this is a particularly good one. And what this candle is saying, that if we start to trade for two to three smaller time frame bars, in this case it will be the 60 or the 120-minute chart, below the midpoint of the wick, in this case it would be 16,867 to 16,860, and today's low is already 18,860. So we've avoided so far trading for a couple of hours in that area. There's a really good chance that this particular candle that I call the Chapman wave Roman candle will see the low tested and probably broken. That's the rule. So now you can see how I use all these different overlapping techniques, because what does it say? It says if it does it today, this will be the first time since the breakout in April or May, in April, week of the 18th, where the Dow broke above the 9-period moving average. This will be the first time that it closes under the 9-period moving average. So I'm not sure it will do that today, but that's the way I'm looking at it. So you can see how important the candle is, number one. Number two is, if there is a close, and I said by Monday, without breaking the low, but if there's a close by Monday above the Roman candle high of, that's the wick itself of yesterday, it turns out the wick and the high are the same thing. That'll be very positive, because now let me go back to my daily chart. The daily chart is showing that cup formation, and this would be the fourth rather than just the third time that you're getting in one of these candles with a big black candle itself. If there's a close much lower than where we are right now, if there is, that's saying there's internal weakness, and it's established and confirmed by the weak technicals. So to break above it by Monday would be really important. It'll start to improve the technicals, not make them great, but it'll improve it. And at the same time, once again, you've got your cup formation, except we've been making higher highs and lower lows. We've got an expanding wedge formation. There's a pattern that, it's called the diamond pattern that it can form. But in the meantime, that's your question. What does the Chapman wave notation imply? And let me just open this up for those people who are new to all this. It implies that a close on any intra bar that holds for a while under the midpoint of the wick says good chance you're going to go and test or even break the bottom. That would be 16,805. And if there's a close towards the top, that's positive if it's over the 90 EMA. But if there's a close above yesterday's high, it says you should have a second candle at least that goes even higher. I hope
the daily, the April 15th candle is a perfect example.
Yes,
because if you look at the stochastic, it's terrible, right?
Right.
And it formed that Roman candle, and there you go. And it's amazing how many, although the MACD and the stochastic look really poor, it's amazing how that one candle really gave it a tremendous amount of information, it seems.
So that's the beauty of this. It took me a long time to figure out the importance. You know, Steve Nissen has done he introduced the United States of America to the idea of Japanese candlestick patterns. I've not ever heard him talk about this, what I call the Roman candle. The reason why I call it the Roman candle is that when it fails, it blows up just like the Roman candle. So And if it happens at lows, it has a different connotation. At highs, it has a more negative connotation.
So again, it sounds like your bias then it continues to be negative at this point.
Right now, on a shorter term time frame, because my weekly charts are still very strong. So this is a way of using these particular techniques to try to capture a little momentum before you get the weekly charts actually confirming. So yeah, I've gone ahead and we are short. And as I say, we've got a fairly tight stop, but so far it's working out nicely. And all we have to do is now I have to tell you something about this very tight, very small peak. I hope Brent doesn't mind waiting just a moment longer and holding on for the next call. But the peak C that was made at 16,978.02, and the very next week, the week of the 27th of June, just 5 or so points lower, and then we broke to a new high, and now we're doing the same thing. Another break to a new high would say, hey, you know what? When you break to a new high very quickly in a D or an E, instead of turning down sharply, you've got to take that as strength. So all this talking about the Roman candle, just it infers that the importance of this candle, as you've just noted, cannot be dismissed. So the close above it in the next by Monday would be very important and very positive. And a close, as I think I said, was 16,000. Was it 850? I think I said would be. Let me just give you the exact figure. Yeah, below 16,860 would imply real good chance we're going to test the low of last week. But my weekly chart so far technically are giving me signs to be careful. That's why I wanted to head and go short, even though they haven't given any sell signal yet. It's just a hint to say, hey, any move below that 9-period moving average, you've got to respect. So I hope that helps you. And thanks so much for calling, and have a great weekend, Ben.
Thanks a lot, Basil.
Thank you. Let's go to Brenton Martinez. Hi, Brent. How are you?
I'm doing just great, Basil. How are you doing today?
Very well, thank you.
I'm calling about Molly Corp. This is a stock I've been following for quite some time.
MCP.
And as it's been barreling down here, it seemed to me that it had the technicals, as hard as it was coming down, were not as bad as you would suspect them to be. And so I thought, took what I considered to be kind of a low-risk trade yesterday on the reversal, and I bought some at $1.70.
Ooh, very nice.
And so I just want to get your opinion. I know the charts, I'm sure, are probably pretty ugly, but get your opinion.
Let's do this together. We're looking at MCP, Molycorp Inc., and they are in the molybdenum area or something like that?
Yeah, rare earth minerals.
Yeah, various minerals. And the 120-minute chart came straight down using this black line, the 9-period exponential moving average, as resistance. And then it has a little candle, I call it the silent candle, from the intraday yesterday at 4 o'clock. And then today, what happens? Today's the 11th, so it was Wednesday. And then Thursday has a pretty lousy candle. It goes down to 1.61, a recent, I wouldn't say all-time low, but a recent multi-year low. And then it starts a brand new move up. And you must have been watching this so closely because you got it perfectly. A little confirmation that it wasn't going to retest the bottom, and then it just soars and closes towards the high of the day. And right now it's trading at 2.16, up 20, up 10.20%. Nice, nice, nice. So you're up about 11%, and that's the 120-minute chart. Stochastic went to about the single digits. Now the stochastic's at 48%. I love a very quick move where the beta, where the fast-moving average crosses the slow-moving average. I always open my hands when I do this. Let me see. We've got the cameras here, folks. I'm going like this. You want to see a nice expansion in the distance between the two moving averages, confirmed with the price move, confirmed with the price above the 9-period moving average, and a close above the 9-period moving average, which we just got in the last 2-hour chart. And you want the MACD to make a nice wide turn and zip right across. So on the shorter term, near term, I should say, great entry point. Now, we go to the daily chart. The daily chart is using the 9-period moving average of 224. The high today is 223, the low is 193, as some kind of a resistance level. That's going to be key. Why? Because if in the next 2-3 days it closes above 224, preferably going to 227 to 231, It says 234 is the next moving average resistance, but it's not that. It is the gap on the 2nd of July with a high of 249 and a low the previous day of 253. That 4-cent gap, that's the area. And I'm going to draw this in right now. I'm going to do a little work on this for my subscribers over the weekend to see if we want to join you, because you're going to now be the leader. I'm going to have to call you to get the information. Beautiful entry point because of the risk to reward. Now let me just do this to give some kind of a V-shaped pattern that I'd be looking at. And this says that by the 21st of July, this is the daily chart, it should be testing the gap above 249 to 251. Of course, you want that to happen much sooner than that. But here's what I'm looking at. The candle that's forming right now is just a perfect example of the Chapman Wave Roman candle, but at the bottom. Wow, what an educational hour we've got here today. And what does it say? It says the low of 161. Let me type that in. Yes, I've got it, 161. And let me, before I do anything else, swing over to my notebook and put a big MCP with a question mark. And I'm going to put Brent, because you're the one that reminded me about this, because I probably would not have seen it unless it came up by chance. Okay, good. So now this is what I'm going to suggest to you. You've got your, so this is an entrance that you've got to the stock with the idea that if there is some kind of a turnaround that is more intermediate rather than short-term pop and drop, that you might add to it, or is this the position and you're just going to sit with it and see where it goes?
Yeah, the latter. I have a stop at $1.60, and I'm just going to let it go at this point.
You see, the way that you've entered and the way that you've enunciated your thinking, I like that very much. And this is the reason why. When the candle hasn't closed for the week, so I can't even talk about it as if it is a Chapman Wave Roman candle, but it's got all the precepts, got everything that we talk about. It opened, made a fractional higher high, plunged down to a lower low, and it looks like it's closing above 207, which is the halfway point. So that's as it stands right now. Before noon Eastern times, we've got 4 hours, just over 4 hours to go. And in the Dan Peak, he says, short squeeze. Yeah, do you care if it's a short squeeze or the real thing? As long as it goes up, right?
Yeah, exactly. No, I've followed it for a long time, and it seemed like it was cascading down. I just wanted to see that reversal, which it did, and then I had that 10-cent stop basically in the thing.
Oh, I think that's fabulous. And you know what? I'm just going to say to you, I think you've got a fabulous entry point. My eye, and this is just my eye right now with the 2-hour chart, says that 207 to 203 will be really important support. I would not like it even to go there, to have a V-shaped pattern. To have a V-shaped pattern, if it touches 207 to 203, it should do it just for like one moment, 15, 20 minutes, and then immediately want to close up at the 214 level on that bar or the next bar. And you want to clear 224 as quickly as possible. I love this. You've got a nice entry point. Let's follow it maybe by Tuesday or Wednesday. If you want to call me, we'll look at it again, and hopefully it's in 223 or 227. Hey, nice entry point.
All right, have a great weekend, Basil.
Thank you very much for calling. We'll be right back, folks. Dow's down 29, S&P's down 2.5. We'll go through the market.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Learn about good health and fitness. Living a Primal Lifestyle with Nico and Paige. Next on TFNN.
Just before we go any further, 3 things I wanted to do. One is Pete D in the Den just posted something. You know, the Den is just a great resource, folks. It's just tremendous. And this is about Molycorp, and I'm going to recommend that Brent in Martinez, California, check it out. Check out all the news you can about Molycorp. There's something about bond holdings and a whole bunch of things. And I think it's just worth knowing the fundamentals because I haven't had a chance to read it. But I saw the word bankrupt. So I do not want that to happen to you. So please check it out. The other thing is just real quickly, silver wheat. You remember we had Ari call the other day and I said, Ari, it's acting very well. I'd be looking to maybe raise your stop on something because this particular pattern says that when there's a pullback, it's very quick, very sharp. And you might want to take the opportunity to be looking at it. This is SLW, Silver Wheaton Core, silver company trading at 26.74, up 21 cents, low and bold. And also I said to him, this is a good educational thing because in the Chapman Wave methodology, the difference between an instant restart and a continuous pattern that goes to an F or maybe a G is when the MACD continues higher without any bumps at all, and that's exactly what was done. And look at that huge move yesterday. It climbs to a recovery high, up at 27.66, and then plunges down to 26.40. That's $1.20. That's a big move. One of the biggest red candles it's seen in a long time. And lo and behold, it holds the 9-period moving average. I'd still be a little bit careful. It went to peak E in the 120-minute chart, pulling back sharply to up channel support. I meant to show this to subscribers this morning, and I just didn't have a chance. Turns out this is exactly what we were looking for. And there's the weekly chart, E/A, now that it's gone to new recovery high. Just wanted to talk about that. I wanted to talk about Facebook for 1 second here, because there was a question in the den. Facebook's acting very well, and that's exactly what's happening here. Rotational market. Every time there's a pullback, buyers come in. Every time there's buying, sellers come in. This is a distribution phase. I think you've got to be. I'm a little more cautious than normal. So at this particular point, peak D in the Facebook pulling back. It needs Facebook needs at 66.12. It needs to quickly get to 67.01. And that'll say, good, now maybe you can retest the recent high. But actually, the weekly chart is saying, hey, you know what? It just needs there's a nice counter trend rally. Same thing with the monthly. The monthly should still go to D. My eye says that from the way I'm looking at it, if Facebook's able to get to 67.50, that'll be good. But if it breaks down next week at any point and goes below 64.20, be careful. So now let's go to what I'm looking at, and this is what you can say during the weekend. I will be posting charts to my opening call, the Monday charts. As I finish them over the weekend, as always, I'll be posting them so you can start to peruse them beforehand. I don't know what the VIX daily is other than leg B. That's the only way I can count it. Then it's going to be a peak B if it doesn't go above the high of the day, 13.23. My eye is saying here again, the technical's improving. It's making a high. It's just in the last couple of days, higher highs and higher lows. First time it's done that in quite a while. The weekly chart, for the very first time in months, has gone back to the 13s before the 1289 was I couldn't break above. So it doesn't matter where it closes. The fact is it made a higher low bar, and this is going to be saying now we're into an area where you've got to be careful, because the daily is starting to help the weekly and the MACD. You see the positive divergence between the stochastic and the MACD. This is saying be careful. Next week might not see too much on the upside. We might see more on the downside in the stock market. If that's the case, the volatility index, if it gets to 1353 or higher, is going to say now be careful, because once it gets to the 14s, the down channel that was drawn is actually an inside track. One of the resistance areas. You start holding in the 14s, and then this market starts to pull back. So make it real easy. Dow closes in the next few days underneath 16,000, I'd say 16,700. We've already started the corrective process. Closes above 16,950, and I'm saying to myself, oh, good action. It could go higher. Just make it real easy. Have a great weekend. Stay tuned. You've got
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.